Hi, this is Janine with Real People Realty, and thank you for joining me for the First Time Buyer Bootcamp video series. This is video 1 in a 3-part series, and the reason for these videos is that it can answer specific questions you may have about the buying process. A lot of first-time buyers are at a loss what they need to do, how much money they need, so I put together these videos to help answer a lot of these questions that you probably have too. So you've been online, you're looking around at all these different houses, and you decided that you're ready to fire your landlord and you want a house. But what do? How do you get started? How much money do you need? Who do you need to be talking to? So a lot of these first-time buyers, and you might be making these mistakes too, start out doing a lot of things that are actually counterproductive to getting the home that they need. They actually start out doing things backwards, like focusing most of their time on their home search. They may be even calling real estate agents to go out and see homes, which is a total waste of time, because if you don't know what kind of house you can afford, how much, if you're even going to be able to get a loan, there's no, it's a waste of your time and the realtor's time to go out and try and look at the house. If you haven't gotten your finances together before you start your home search, that's a mistake. If you haven't talked to a lender to see if you can get qualified or how you can get qualified, if you have not looked at your credit reports and you don't know what your credit scores are, and the big one, if you have not saved either enough money or any money to buy a house, these are all big rookie mistakes. And this is why we're going to get a plan together so you can go forward and be successful and actually get a house. So, your plan. What do you need to be doing? What's the key thing that you need to follow, your basic ingredients, so you can get the house you want, if not now, in the future. You're going to follow these basic steps, and that is going to make it easier. And this is financial. All these things are dealing with not the home search process, but the financial process. Because if you don't have the financials together and you don't get this financial heavy lifting done at the beginning of this process, you're going to waste a lot of time and you can delay getting the house. So, to start, you need to save money. Yes, you do need money to buy a house, contrary to popular opinion. If you don't have a bank account, you are going to need one. So set up a bank account or, contact a credit union, but set up a savings account somewhere or a checking account. Set up a budget for yourself and start socking away money. And I will be discussing a breakdown of about how much money you need to save so that you can successfully be able to buy. Know what's on your credit reports, know what your credit scores are, and these two things are very key because this is one of the first things a lender is going to be looking at. What type of credit do you have? Do your credit scores qualify you for the loan products that they have? And there are different qualifying scores for different loans, but one of the biggest milestone points is a 640 score. And that will get you into FHA with a 3.5% down payment. Of course, there are some programs that will get you qualified with a lower score, but typically the lower the credit score accepted, the more money you will have to put down. So your goal is to get the highest possible credit scores, and you can check out a site like myfico.com where they give you a lot of information about how to clean up your credit, how you need to be paying your bills, and how late things, collections, how all of these different factors feed into your credit scoring and your credit profile. It is an absolutely great site. You can get your credit scores there. You can also get copies of your credit reports there. Another place you might want to check is creditkarma.com. A lot of people use that site too. You can also get your credit reports and credit scores through there. Another thing you need to be doing is paying down your debt. Even if your credit scores are where they need to be, if you're carrying too much debt, you can still be denied. The lender, again, is going to be looking at several different factors to get you qualified. One of the key ones is how much debt are you carrying. If your debt to income ratio, that's a term you're probably going to be hearing. If that figure is over 40%, say to be safe, that means if your monthly credit payments are over 40% of what your monthly income is before taxes, you probably are going to be disqualified from getting a loan. So you need to pay your credit cards down or pay them off if you have any outstanding smaller loans that you can pay off. Get rid of those. As much debt as you can eliminate, the better it is, the better your chances are of getting approved. You also don't need to be opening any new accounts. Now, this is in particular for people who are 6 months or less you're trying to buy. Your focus is going to be to clean up your credit, try and do everything you can to boost your scores as high as possible. If you open a new account at this point, it's going to be too new, your credit is going to take a hit, and it's going to make your credit scores go down temporarily. So at this point, you do not want to open any new credit accounts. But if you're a year out, you're not going to buy for a year, maybe 2 years, and you need to establish some credit because you have nothing, you don't have a credit profile, then you do need to open at least 1 to 2 accounts so that you can start to establish a credit history. You show a payment history, use a credit card, something like a secured card, and I do have access to that for you. Charge a little bit every month, pay it off. This will establish your credit. And please, by all means, pay everything on time. Because particularly now, this is not the time to be skipping any payments or letting things go to collection, because your credit will be damaged and it takes so much longer to get the credit scores to recover than it does to get them to fall down. So make sure you pay everything on time, starting now, from the time you're trying to get qualified all the way through the time you close your deal. And the last thing you can do in your plan is talk to a mortgage professional to find out what you may need to get qualified. If you can qualify now, that's great, and you're ready, you can move forward. If they find things on your credit report or your credit scores are too low, they can tell you what's wrong, what do you need to do to fix it, if something needs to be paid off because it's going to disqualify you. All of these things they can let you know by looking at your credit reports. So it is really key to talk to a mortgage person at the beginning, and this way you'll know what do you need to do to go forward, how much money is it going to take, what type of loan can you get qualified for, and get some idea of how much it's all going to cost. Now, we talked about money a little bit before. How much money do you actually need? And I'm not saying that you need to have a giant wheelbarrow filled with money in order to buy a house, because you don't. But you do need to have a good down payment, at least 3% to 5% of the purchase price of the home. There's different loan products out there, and with FHA, the minimum standard is about 3.5%. There's some conventional that may go as low as 3%. So if you target 3% to 5% of the purchase price, you're good. Your earnest money deposit typically is around $1,000, and it's just what it says. It's a deposit of good faith. When you get an accepted offer on a house, you found the house you wanted, you put in your offer, the owner accepts, they're going to be expecting you to put a deposit in the escrow, which shows you're a serious buyer. Now you're going to move forward in purchasing the house, and you're going to be securing your financing. So this deposit shows you're serious. And that is going to need to be paid within 2 to 3 days after your contract on the house has been accepted. The next step in the house acquisition is getting it inspected. And that you need to have done within 5 days of having a contract accepted. Now, a home inspection is not required, but it's a good thing to have it because you don't know what you're getting. You need to do due diligence on your house. The appraisal fee, the lender is going to require this to show that the purchase price matches what the house is actually worth in the market. Your homeowner's insurance, the lender is going to require this, and it needs to be paid up for the first year. If you're hiring an attorney, they may require you to pay a retainer fee. So most attorneys, or a lot of attorneys, may not charge you anything until the closing, but you need to be prepared. And closing costs, you can get these paid sometimes by the seller. Your lender will be talking to you about your closing costs, because this is going to cover fees and different costs that the lender is going to charge. A lot of this will not be due until the actual closing, and you need to be prepared with about 3 to 5% typically, and it, of course, is going to vary with your type of loan and your purchase. So this is a basic outline of how much you will need to save, and I would say anywhere from 5 to 10,000, depending on the purchase price. Again, is a good start. Now, there are down payment assistance programs out there where you can get money to put towards a down payment, and this will lower your actual out-of-pocket costs. These programs come and go, and I can let you know what's available when you get ready to buy. There's also credit repair services that can help you, and they can also help. We have a company we work with that can help build your credit as well. So if you want more information on credit repair service, go to creditboost.instapage.com. They can also help you with adding your rental payment history to your credit reports, because this is key. This is not reported in. A lot of people don't realize your rental payment is not reported to your credit, but this product can help get this added in. It'll create a trade line for you, so if you have no credit, wow, suddenly now you have a trade line, you have some credit that'll show up on your credit reports. Or if you want immediate assistance and immediate information, give me a call, 773-368-0995. Now in the next video, I'll be going deeper into the credit and how it all works and what you can do to boost your scores and get your credit tightened up. I'll also be talking about what documentation you'll need to get together, because your lender is going to be asking you for specific documents in order to get pre-approved. And we'll get to more of the fun stuff, which is how to find your dream home in the shortest time so you can save yourself some money. So I hope you found this video useful, the information useful, and I'm certainly hoping that you're going to move on to video 2, because I've got a lot more information for you. In the final video, I'll move into what happens when you actually find the home you want. I'll go through all the steps of what's going to happen from the time you find the house and make your offer to finally getting it closed. So I definitely hope to see you in video number 2. Thanks.